right? So we're gonna look at order blocks versus fair value gaps. I also had someone ask me, okay, which one do I use? Do I use the order block or do I use the fair value gap? Right? And it's relative, let me say, to the pair that you're trading, right? And as you start to trade, certain pairs more often, you'll see that, for example, both are relative, but some may react more from a imbalance, also known as a fair value gap, or some may react more from an order block. Okay, and that just comes like you will know based on just testing, going over and over and over the charts and so forth. All right. So first thing, all right, we're gonna look at fair value gaps, also known as imbalance. Okay, fair value gaps, also known as imbalance. If you were at the boot camp, we spoke about this. Yeah, we spoke about imbalance. All right. So nobody should be clueless when we are talking about imbalance or fair value gaps. Okay. So let's talk about it. Right. I'm gonna use my artistic skills at this point so we could illustrate this and make it make sense. All right. So let's make some adjustments here real quick, guys. All right. So we're talking about fair value gaps. All right. I'm gonna give you some different examples here real quick. All right. So this is the easiest one to spot, okay? Where we've got, well, let me work it out. All right. Let me get my let me get my artistic self together. This is actually pretty difficult to draw to show multiple. All right. Let's see how we're gonna get this done. Yeah. All right, so imbalance, right? We know the different areas of imbalance, right? So for example, right, let's see, we're looking here, right? Here, boom, this area here, right? From here to here would basically be our imbalance, right? Our fair value gap, okay? So we got literally just one big area here representing the gap in the market, right? So from price right here to price right here. All right, you guys know, I'm trying to keep it as simple as possible at this point. We know it's a three candlestick pattern. Okay, so we're able to identify the imbalance, right, between here and here. Okay, so we could get a little technical and put the wicks. Yeah, keep it as, I guess, real as possible. Okay. So, okay, that's your gap. Okay. That's your fair value gap right here. Boom. So that space, we know at that space, we literally only had buyers going to the upside. There were no sellers within this space. Okay. So that's one. Two, we have, for example, multiple areas of imbalance, right? So like here, for example, right? I try my best to illustrate it. Um, yeah, I try my best, guys. All right. But let me see how we can get this drawn. Okay, cool. I think yeah, we're looking like we can in there, right? You guys following though? Let me know. Just let me know, right? Sometimes it could be a little difficult to draw it out. Yeah, okay, good. All right. Once y'all following. Okay, good. All right. So that means we got to draw one more here then to get multiple areas. Okay, cool. The other one that I want to draw in, my brain is just not computing on how to get it done. All right. All right. So we have here, we got multiple areas of fair value gaps. All right. So we got a space right here. Example, bam. We have a space right here. All right. Boom. And then we have a space right here. all right, as your next gap. Okay. Uh, 1 sec, guys. All right. All right. Cool. So we got that gap, we got this gap, we got this gap, then we got this big gap right here, right? And um, I am trying to illustrate this one. Let's see how we do this. So that's the big gap. This is multiple, and then I wanna create the one that is low. All right. I guess we could do it like this. Yeah, for whatever reason, my mind was just not computing just now how to do this. All right. All right, cool. So then we have this area, boom, all right, and right here. All right, so this is, all right, okay, good. So we on point at this point. Yeah. All right, so we got three areas of imbalance, or three different ways, it shows up. So we got this big area here of imbalance or fair value gap. We have this area that is lower to what we would consider to be a order block, right? And then we have multiple areas um, of imbalance, right? There are multiple areas of imbalance. So when I see this in the market, what do I actually do? Right? We got these three different scenarios. What are we actually going to do, with this, right? Let's start here first with the big area um of imbalance, right? So we see this massive area right here, right? The downside is, let's see how we could. All right, cool. The downside is of course the area is huge, right? Yes, we know that price could, pull back into the area, boom, and then push and go, right? But setting up an actual entry for this is a little bit difficult, right? Because the area is so wide, right? And obviously the wider the area, so much can happen within this area, right? So here's what we want to do. We want to write this down, right? When you have an area looking like this and you're like trading off of fair value gaps, right? Or imbalance. Because remember, it's not wrong. You know what I mean? If you decide to trade off of an imbalance, it's not wrong. All right. Uh, or you decide to trade off of order block, it's not wrong. All right. It's just you gotta know exactly one, the pair that you're trading, and two, how to treat these markets. And what I mean by how to treat these markets is from an entry stop loss perspective. If you're looking at this area, right, then you know that price could come to the top of this or this imbalance and price could move. We could probably come like within 50% of the imbalance and then push and go, right? The downside with this is that if you have something looking like this, where it's a major imbalance here to the top, and you decide to put in entries like this, then your stop losses are going to be huge. Okay. Your stop losses are going to be huge, and really and truly the trade don't make that much sense, right? Because you might not even reach like a one-to-one type of scenario, right? If you go 50% of the area, then I mean it's a little bit better, but you still have a pretty big stop loss, right? So here's what you want to do. Here's my advice. Okay. Like I said, I don't know exactly how you guys treat the markets. So I'm gonna show you, just based on different scenarios that you may encounter. If here's my suggestion is that when price reaches the area, you write this down, wait for a lower time frame structure, right? So if this, for example, is on a 15-minute perspective, you're going to wait for a 5-minute perspective, wait for a 5-minute, break of structure within the imbalance, right? Within the fair value gap before you make a decision to enter the trade. That way, you may have a trade, whereas it may look something like this, right? And then you are able to get in, right, on an area looking like that, right? with your stops right around this particular area. Okay. So now you have a much better risk to reward ratio, right? With imbalance and so forth, right, like this, right? We have a much better risk to reward ratio. You get into the markets, a lot less stress because of the stop loss and so forth, right? So that is how what aspect do you want me to repeat? But that is how you want to enter the market. So what you're going to do, you're waiting for price to pull back into the imbalance, and you're going to wait for a lower time frame break of structure, right? I'm going to show you guys these as well, all right? But you're going to wait for a lower time frame break of structure because it's going to increase your risk to reward ratio. Okay, it's going to increase your risk to reward ratio. So this is one way you approach major areas, right, or massive or wide areas of imbalance. Okay, that's one. Okay, that's one. Two, this one is the pretty easy one. You don't have to do that much, with this area here where price ready imbalance is lower to the order block, right? If you're trading from order blocks. If you're trading from imbalance, like you could, you should be okay, even if you had to take entry, all right, from the top of the imbalance, right? Or even if you had to go, like I said, 50%, within the imbalance. Yeah. Like I said, it's not wrong, right? It's just based on the pair. There's some pairs that just react off of these areas, boom, and go. Right? Some don't reach the order block. Right? Some just react within the imbalance and then go. Right? We take a look at some of them as we go through. Right? And then the big question here is when I have multiple Kai, what do I actually do? Right? When I have multiple areas of imbalance, what do I actually do? Well, here, guys, simplest answer to this question is remember, we are always buying or selling within discount or premium areas. Okay, so for example, if this is my area here, right, and my area here, I immediately rule out this area here of imbalance, right? Because this is in a premium price. I don't even want to be trying to buy within a premium price. So I immediately roll out this area. This becomes irrelevant because it's not even below 50%. Remember, below 50% is your discount. Above 50% is your premium, right? So I'm not even trying to buy, within premium zone. All right, I'll be waiting for price to return. Whoops. All right, I'll be waiting for price to return within this discount zone. Right, within this discount zone. So remember, above here, right, this is premium prices. Yeah, we don't want to be buying in there. Yeah, okay, we don't want to be buying in premium price. We want to be buying in discount. Down here is our discount. Okay, so you'll be waiting for price to return to these areas before you even think about buying. Okay, same thing if this was a sell scenario, right? You'd be waiting for price to return to these areas before you even think about buying. And then if it is going to buy from, this fair value gap or this fair value gap, guys, same thing. You just wait for lower time frame breaks of structure. You want to see price shift. When price gives you that shift, then the likelihood of price pushing in the direction is way higher. Okay, the likelihood of price pushing in that particular direction is way higher, right? So these literally that's what it might look like, in most scenarios, right? As it relates to imbalance, you may see white areas like this. You may see price lower to the order block, or you may see multiple areas of imbalance, and like I mentioned, lower time frame breaks the structure here with this, right? We zone in on a smaller time frame to take your entry. You just wait for price, to tap back into this area. You can go 50% of the area. And here, you can also just wait for price to trade back into 50% of the actual impulsive move. Okay? Let me know if that makes sense. So you're just buying in discount, right? You just wait for the discount prices. The imbalance that has your attention is within the discount price. If you're buying and it's within the premium price, basically if you are selling. So you just wait for that to happen and then you get much clearer and easier entries. Okay. Okay, good. All right. Okay, awesome. All right. So now let's talk. We're gonna talk because remember we're doing order blocks versus fair value gaps. Like which one? All right. Correct. If it's like Grace said, you get a better risk to reward, right? And moving this off the screen right now, guys. Right? All right. So that's order blocks, right? So that's your value gap story. So now we're gonna talk order blocks, okay? Because when it comes to order blocks, now you want to know like what's the high probability order blocks, right? What's the order block, that when price reaches that particular area, it is highly probable that price is going to react and push in a direction that they want it to go. Okay. So all right, first thing is, wait one sec, guys. Okay, cool. All right. So first thing are the blocks, right? With the high probability are the blocks. What you want to look for, very simply put, is you want to be able to identify an area of imbalance above that order block. Right? If you have an area of imbalance above the order block, right? Of course, I'm just doing by scenarios here, right? But if you have an area of imbalance above the order block, guys, it makes it even better for you, all right? It makes it even better for you because now, at this point, we know that remember order blocks are rather remember imbalance or fair value gaps is just areas of liquidity within the market. Okay, it's just areas of liquidity within the market. So it strengthens my order block. It strengthens this area. Remember, your order block is the candle that creates, right? That creates the imbalance. Okay, that order block is that candle that creates the imbalance. Okay, so where you have, for example, price within this area, we know that money is sitting here. Okay, money is sitting within this area right here. So the strength of my order block is significantly increased, right? Because the market, of course, it has a reason to trade back down, within this area. Great, right? It has a reason to trade back in this area. So, if anytime when you see imbalance above a clear order block, you love that trade. Okay. I love on that trade is like, yeah, I see you. I'm about to murder you right now. All right. I'm about to murder you because the probability becomes way higher when you see that. Okay. The probability becomes way higher when you see that. So, of course, same approach, you could actually take entries, right? You can actually take entries on the opening of the order block. Okay, you can actually take entries on the opening of the order block. Remember, this becomes your order block here. All right, this is basically where all the orders and so forth went into the market. This is what caused the push. Okay, this is what caused the push. Boom, and created the imbalance. You can literally put entries, right on the opening of this. All right, this will be the close. All right, on the close of this by candle. Okay. That could be one way of entering the market, or as well, of course, based on the actual peer, right? 50% of the actual area, okay? 50% of the order block, okay? So, for example, then, maybe looking at an area looking like this, yeah? Now, of course, the disadvantage with trading off of the order block is that not every time the market is going to be that precise. Sometimes price could just tap the imbalance and go. All right, that's the risk of it, like it happens, all right? Price could literally just trade in here, boom, and then take off. Yeah. But like I said, it depends on your peer. It depends on the volatility of your peer. I trade gold a lot, so gold is very volatile. Gold taps into it. All right, it's very unlikely that gold is going to miss that order block. All right, gold is going to trade right into that order block, and test you. Might even get like a slight wick below the order block and then push and go. Okay, You got to know your pair. Is it volatile? Is it slow? Is it just going to trade off of the imbalance and move, right? Or is it going to trade right into the order blocks and then go? Okay. And that's going to come with back testing. That's going to come, with actually, going over the market over and over and over again and seeing how it actually works, all right? Seeing how it actually trades. So that's why, like I highly recommend like focusing in on a pair or two, get good at it, see how it moves. It's like building a relationship, you know what I mean? Like you can do that with many people at the same time. Yeah, it's difficult, right? It don't make sense. It's a waste of time, right? I mean, intimate relationships, let me see. Right? Intimate relationships, it don't make sense, do that. Like it's stressful, of course. All right. Well, of course, we can build multiple relationships, it's just different levels. Right? Just different levels of relationships, right? There's that circle, for your business friends, your fun friends, your intimate friend, all right, our significant other, let me say, etc. Right? There's those different relationships, right? But there's one that you are going to know like nobody knows. Yeah, zone in on that one, zone in on that peer. Okay, so I hope that helps. Yeah, so order blocks, that we got. If you get an imbalance above the order block, boom. All right, that's a lovely type of setup. Okay, then there's the order blocks where they're small. Yeah, so you might see something like this. Yeah, small area like that, it got there's the imbalance and so forth above. Yeah, like everything aligns same way, right? But the area is very small, the order block is very small. So if you're wondering, okay, like what do I actually do? Because this is the area here I'm really looking to enter off. So it's like this is the area here that I'm looking to enter from. Yeah, this is my order block. My suggestion is approach it the same way, but like I said, you can miss it, right? But when it's so small like this, I don't go 50%. I just go on the close of this candle right here. But I give it more room, right? I give the trade more room because, like there's no rule that says when price trades into my order block, it has to reverse. All right, guys, remember this is trading. You know what I mean? Like there's no rule that says price comes here, it has to, right? There's no has to, there's no must. Right. And that's why we say like gold, for example, might run right through, boom, come all the way down here like this, pass you, and then boom, push right back up. You know what I mean? So it happens, right? Those things happen. I'm gonna find some practical examples to show you on the chart, all right? But so that's why you just want to trade and use wisdom, basically, right? So the order block, when you see small order blocks like this, yeah, when you see small order blocks like this, give your trade some more space, right? Give that stop loss some more space. Don't go right below here, saying, okay, yeah, when price comes, it has to top and push back up. It absolutely does not. Okay. So you want to give yourself some room like this. Okay. Everybody following? Everybody following? All right. Remember, said we're going to take it to the chart, make stuff make more sense. Okay. Okay, good. All right. Last one, very similar to the fair value gap. So, somebody had a question? Okay, cool. All right. Very similar to the fair value gap. So when you experience, like major areas, right, where you see like a massive, fair value gap, sorry, a massive order block. So that may be a case where you might be like on a 4 hour time frame or something like that, right? Where you're looking for price, to trade into this area here. All right. Very simple. What you want to do is you're going to drop, right? When price trades back into the area, all you're doing is you're going to drop the time frame and wait for lower time frame breaks of structure. Okay. You're going to drop the time frame and wait for lower time frame breaks of structure. Right? Trading is actually not very difficult, right? You guys remember I told you guys at the beginning that it's like the same, it's principles, whether you're trading fair value gaps, whether you're trading order blocks, whether you're trading breakout, whether you're trading a break of block, etc. Like it's the same principles that apply. When you get structure breaks, right? Like, you can't really deny that. And that's why I always emphasize like learning structure, because once you learn structure, then everything it applies basically the same way. Right. At this point, all we're doing is just working on precision in the market, right? We're just getting more precise with where we actually enter the market so we can reduce the stops, increase reward. Okay. So I'm gonna give you guys three quick rules. I'll give you three quick rules, right, for high probability order blocks and fair value gaps. All right. So beyond, of course, the liquidity, beyond the imbalance being above like already part of the block, I'm gonna give you guys three rules. I want you guys to write this down, right? Because it should help you significantly once you apply them. Yeah, you're gonna see how like it makes life a lot easier as well. All right. So three rules, real fast. All right, here's three rules. Number one, trade with the trend. Yeah, trade with the trend. Okay, and actually, let me put a clear trend. Okay, so are the blocks, right? That, for example, like you have are the blocks, for example, like within areas like this where you can identify, okay, yes, this is a clear downtrend, okay? And I can clearly identify my order block up here. I can clearly identify my imbalance and so forth, right, guys? These types of setups are easy, right? Like these types of setups are like, it's like begging you to take its money. Okay. It's begging you to take its money at this point. Yeah. So trade with the trend. So your entries for these types of setups are within these areas, right? So you're looking for price, right? You're looking to destroy price within that area right there. Okay. Wherever you get, wherever you can see, a clear trend, you get, a price pulling back up within these areas, boom, you know that you can go ahead and mash up the market, all right, within those areas. Okay. So if it's a uptrend, all right, if it's an uptrend, then same thing applies. All right. You're going to increase the probability of your trade, all right? To increase the probability of your trade, look for those order blocks at the lows. Okay. Look for the order blocks at the lows. Boom. Look for the imbalance at the lows. Okay. Look for the imbalance and the order blocks at those lows. So look for the order blocks and the imbalance at the highs for sells and at the lows for buys. If price is trending up, go for it here. The likelihood here, all right, trying to catch price here for, a push back down, it's not that it's impossible. It's just the likelihood of it. It's not that high. Okay. So we want to remember high probability trades. Okay. High probability trades. And if it's highly probable, all right, if it increases the strength of it, this is what we're working with. We work with the trend. That's rule number one. Okay. We go with the trend. Okay. Rule number two. Rule number two, right? You want to get a break of structure. Okay. You want to get a break of structure. That's your next clear indication as well. So, for example, if price comes up here and pushes down, the market breaks structure here. Okay. Which, of course, signals a continuation of price. Yeah. It signals a continuation of price. We know we got a break of structure. That means that this is considered to be a strong high, right? A strong high. Please remember this. Any high that breaks a low is considered to be a strong high. Any low that breaks a high is considered to be a strong low. All right. Any low that breaks a high is considered to be a strong low. Any low that breaks a high, which gives us this break of structure, guys, is considered to be a strong low. Okay, so if it is a strong low, anytime price returns in this area to imbalance to or the blocks, the strength is there, right? So that it should hold price to continue up in the direction. Everybody following? Right? Anytime we get price pushed back into areas like this, these are strong lows, so it should hold, right, for that continuation of price. So one, you're going to go with the trend. Two, you want to get a break of structure. If you see these lows that we're looking at, or this or the block that we may be looking at, breaking any type of structure, then you know the likelihood of price holding when it comes back, it is strong. That makes sense? You see the chart, all clear. All right? You see the chart, all clear. Yes, all clear was to ask about that. Perfect, right? Perfect. No, remember, like I said, it should. Because like I said, there's nothing that says that, well, yes, price broke this high, boom, we push back down and so forth, right? There's nothing to say, okay, well, the market is at a point where it wants to reverse now. Okay, like there's nothing that says that, okay, that it can't reverse, right? But the likelihood of it happening is not that high, right? Now, in a scenario like this, where you may see, okay, well, price pushes up, comes back down, this comes like this, no, and then comes back down. Guys, we know that this area, it ain't that strong, right? It's not like it can't hold, but it's not that strong. Why? Because price didn't break the height, all right? Price didn't break the height. So my low is not as strong as I think, right? Because the price didn't go ahead and break this height. Can it hold? Yes, it can. All right. Can it drop through? Yes, it can. But remember, trading is just probabilities. Yeah, it's just probability. So I want to be on the highest end. I want to be highest end. I want to know, okay, well, what's the likelihood, of if I put in this trade, my trade going to hit? Is it a 50-50? Because that's what this is. It's 50-50 at this point, right? That's 50-50. Do I want to take a 50-50 trade, right? Or do I want to take a trade that's like 90%? Price broke the high, perfect. Pulls back, great, right? All the confirmation, imbalance in, or the block in, bang. Let's run it, right? I would rather lose a trade like that meet all confirmations than to lose a trade like this that was 50-50. And I mean, we don't want it 50-50. Yeah. I mean, we take the risk sometimes, right? That's why it's 50-50, right? But, you know, like go for high probability. You get high probability and you lose, know that that's what you call losing well. Yeah, that's what you call losing well. You lose on a high probability setup, it's like, all right, that was just one of those trades. But when you lose on a trade, I was like 50-50, I was like, boy, I should have left out. Right? You should have left that trade, Shaki, bro. Right? And you have those sometimes, and it's just the way it goes. It's trading, right? But you want to put yourself on the least amount of risk as possible. Okay, so that's the second thing. All right, here's the third one. The third one, all right, is when you get liquidity sweeps. Yeah, is when you get liquidity sweep. So you get a liquidity sweep into order block. All right, just put OB. All right, you got liquidity sweep into our order block. That's the third thing that increases the probability. So let me show you what that looks like. You guys have this. I trust that you have this. You should know this as well. All right, I'm just giving you, very practical stuff that you could use. All right. So liquidity sweeps. So for example, you might see setups like this. All right. What are the three, we call it the power of three, all right? The power of three. So let me see who knows. All right, I'm gonna wait for y'all. What's this? You see this? What's this? You see this happen? What is this? What comes to mind immediately? Let me see. Let me see who was in the academy. Let me see who's paying attention. Ooh, okay. Accumulation. What else? All right. There's three things. So what is it? Consolidation. I mean, yes, it is, but I want to take your mind a little further. Let me see who went through the academy. All right. Let me see who be on this session. Okay. So let's do a grid setting. Right. So there is the accumulation, there's the manipulation, and then there is what? Let's go. Let's do a distribution. All right. So yes, you guys are correct. Yes, this is consolidation. All right. Yes, this is a liquidity grab. Right. So you guys are right. Right. But the entire process, it is accumulation, manipulation, and distribution, right? So when you see this happening, strong confirmation, right? So for example, you may have an order block sitting right here, right? And you may see price do like this, right? Push up. You may see price push up, the market pushing up. I got the chart moving up, guys. Right? Oh, right. You may see price push up like this, boom, consolidate, right? Or accumulate. Then it pushes down, manipulates, right? Which is basically the market grabbing the liquidity that is sitting here. And remember, you got liquidity sitting at equal lows, equal highs, right? You look for the money at those points in the market, right? When we see those things happening, right, we know that once again, the likelihood of price trading into this area, it is very strong. And when price trades into that area, we could get trades that really hit, right? Because we know the money needs the market, sorry, needs money to move. So the market needs liquidity, which is this, to move. So it's going to be attracted to areas such as this, run through it, grab the money, and then push and push hard, within the actual direction that it wants to go, within the actual trend. Okay. So when you see things like this, you're trading with the trend number one, you got to break the structure number two, right? Because this could be something looking like this. This could be a break like this, right? Where price might have broken structure here. Yeah. Consolidated, all right? Accumulated here. Um, Created a buildup of liquidity. Swap the liquidity, bang, and then right, traded into our area here of imbalance, sorry, right? Trade into our area here of imbalance and into our order block, and then the market moves. Okay, everybody following? Yeah, everybody following? So the question is, all right, the question is, do I use an order block? Do I use imbalance? Guys, like I mentioned at the very beginning, it depends on the pair. That's the best answer I can give you. It depends on the pair. All right, it depends on the pair. And because it depends on the pair, be fluid on both. All right, no, okay, like if I wanted to enter off the imbalance, this is how I can enter off the imbalance. If I want to enter off the order block, this is how I can enter off the order block. All right. And that's how it be fluid with the market, right? Because it can see what's happening. If it doesn't reach my order block, then it just wait for a lower time frame break of structure. Okay. Okay. So, okay, good. So I'm interested everybody got this. Let's make this practical. Let's put this on the chart. Everything we just went through, gonna put it on the chart. All right. So look, I saw an example of this on Euro odd. Let me see how it played out. I didn't take the trade because I was waiting for something similar. Okay, good. Look, right? So I got this perfect example. Literally what we were just saying, right? So it's like you see here, right? You see here, for example, boom, impulsive move, market, right? We got an impulsive move here, fine, right? Market starts to accumulate, yeah? So price just starts to accumulate here. We got like a buildup of liquidity literally in this area right here. All right, show you. You got like a buildup of liquidity right here. Yeah. So the market just built up here, right? We just got this going sideways, going sideways. Yeah. And then boom, we got the market now dip down, trading in, sweeping liquidity, all right, grabbing this money, trading down into this particular area here. I don't think it's done. I think we could still come lower and then trade into the order block, all right, and then we could push up from there. Okay. But this is an example of it, where you got that accumulation, the manipulation, and then potentially to come the distribution where price could then push upward. Okay. So just like that, boom, bang, bang, right? Market push down, grab, right? Then we could push again though, to be honest, right? And then move, right? So we can see how that goes. Because you see what I'm saying as it relates to that particular type of setup, right? That is literally the last thing that we just went through, right? You see here how price, it just goes sideways, then the market dips down. Like we want to look for those areas where you see those equal lows. Yeah. Like things like this here, right? Where you see price tap into this area, tap back into the area again, price held within here, right? That's what we call a liquidity buildup. Okay. And those types of areas, markets target, yeah, because that's where money is sitting at. That's where persons would have put in probably like a number of buy orders in here and have stop losses like sitting in this area right here. Okay, our stop loss is sitting in this area here. So remember, stop loss is equity in the market. All right, your stop loss is somebody's equity. All right, your stop loss is someone's equity. Okay, let me see. Someone's it's a question. Let's see real quick. Yeah, correct. So you can see your so the order blocks, right? The easiest way to identify an order block, guys, remember, is by identifying an engulfing candle. If you can identify an engulfing candle, it's easy to identify an order block. Okay. So it's like, for example, right here, this push, okay, this push right here. So we could zoom in. Yeah, this push right here, fine. Yeah, that literally would be your that could be your order block, right? Where price creating, the imbalance and so forth, right? If you go up on a higher time frame, for example, 1 hour time frame, you can see here. Yeah. So you could take the candle that got engulfed and mark that out as the area that you're looking for price to trail back into. This is where all the orders came in here. Okay, this is where all the orders came in right here to push the market up. We call that the order block. Okay, so you're looking for price to tap back into those areas. So that is one example, right? The last example that I give you guys just now, as it relates to the like how to identify like the high probability type of setups, right? So this is a pretty high probability setup, where price could just tap into this area here and push the trade higher. Okay. All right. So that's one. Two, set up the CAD today. All right. This is a great, easy, very simple setup. All right. On this, let me go just clear it. All right. We'll just clear it. So this, all right. You guys can hear me still? Can you guys hear me still? Okay, good. Yeah, phone just rang. Sorry. Yeah. So remember what we mentioned just now, you want to go with the clear trend, right? So like for example, like this, you could see clear trend, market is creating, lower lows, market is creating lower highs, etc. Right? You go with the clear trend. If you go with the clear trend, then it becomes, easier with your entry, right? So when price approaches, order block, all right. When price approaches previous order blocks, then, okay, yes, I can look to take entries, within those areas because of how solid the area is. Okay. So for example, here, right? So for example, here, we know that this high broke this low right here. All right. This high broke this lower here. So of course, we got a strong high. Okay, we got a strong high. So price trading back into these areas. Let's see if we looked at this from a 15-minute perspective. Price trading back into this area here. The likelihood of it, right, is a pretty big area. The likelihood of it, pushing down from here, it's high. Okay. One, we have, so that's one. Two, we have a significant amount of imbalance as well. Right? So all this area here, is imbalance, right? So we have reason for price to come back up, okay, within this area. Um, to get a little bit more specific with the area, right? We could go, actually just keep it, right? But we can see how price tap into that area. And what you could do is either, remember the first to the party type of entry is either you are entering, like I mentioned, 50% of this or the block, yeah, with your stop just above, okay, with your stop just above, or, right, or we're gonna go second to the party, right, where you actually wait, like I have mentioned to you guys as well, I'm just making it very practical, right? I hope you're following as I go through. Where we just wait for a lower time frame breaks, okay? So for example, we have price, trading into this area right here. Okay, we have price traded into the area that we are looking at and looking for. Yeah. So we have the market now like creating lower lows, sorry, higher lows, higher highs, right? Market created higher lows, higher highs. Okay. And then we wait for breaks. Boom. See price broke the low. Yeah. Price broke the low. So great. Right? That's the first thing. So we know at this point, what is this? What is this right here, guys? What is this? Price broke these lows. What is this area considered now to be? Keep it simple, simple terms. Strong high, perfect, Sonia. So this is a strong high. So if price returns then to that area now, we know the likelihood of it continuing down is very high, right? So what we're looking for in terms of an area of entry is basically the same thing, right? What we're looking for in terms of the area of entry is the same thing. What is the same thing, Kai? We are looking for an order block, right? We are looking for imbalance, okay? Once we got those things, once again, the probability of the trade becomes high. Here, we have our imbalance. Yeah. So we see this is the candle. I created the imbalance here in the market. Boom. Okay, we have this imbalance. So we know price could trade back into this area and then go, right? We also have the order block, right? Remember what I said about the order blocks, right? You could give when it's small like that, you could give I would take the entire weight. That's one, but also would give the trade some room. So if you decide, okay, I'm going to take this from the order block, right? Then I'm gonna give my trade some space. Okay? I'm gonna give my trade some space. Yeah? You have a pips, boom, and you take it down. All right? You take it down. So you see how this setup basically comes together? Okay? So it's either first to the party, you 50% of the area, you're gonna have a bigger stop, all right? And I mean 18 pips, still very small. Or you wait for the structure break. So this is just another confirmation. So it's like you got the confirmation right here. Cool. The imbalance, everything it traded into. And then price give you another confirmation, boom, right? Where it broke the structure, right? And pull back now into the area of imbalance and the order block, and you are good to go. So it's like you just got like a double confirmation. You got it here, right? Then you got it again here, all right? And you go from there. So as opposed to you being first to the party right here, you're now second to the party right here for that entry. Does that make sense? All right, did that make sense? So you see on GBP pairs, okay, all right, cool. The likelihood of prices just topping imbalance and moving is not that high, right? Like probably price may go to my actual order block, right? Price may actually go to the order block and then go, all right? Because as I look, even in the past, we look over here, for example, we see how price, like trades right into these order blocks and then move. Price trades right into these order blocks and then goes, right? So you could that's how you start to look at, you do back testing and so forth. You see, okay, is it one of those pairs that just tops my imbalance, or does it go to the order block and move? Okay, gold examples. I'm just showing you literally what we just went through practically. Okay. So for example, scenario like this, where price, you're looking for price to come right up to this. So this is classic example. This is a great example actually. All right. So we see here, for example, we have this order block right here. Yeah. You have this order block right here. This was last night, late. I think I set an alert here, all right? Because it was like 8 about 8 a.m. I'm tripping. That was like 1 a.m., 11 a.m., something. Whatever it was praise. Praise was here at the time. Right, it was 9:30. Okay, cool. So I put in the alert, for when price reaches this area, so that I could get in for a sell on this. Why? Because once again, met all the confirmations, met the criteria, we got the imbalance, we got the order block, right? We have a break of structure, right? You see how price came down, boom, broke this structure. So everything aligned with, okay, yes, this would be a strong area for price to push back down. Now, like I mentioned, you got two ways you enter the market. It's either one, you go off the opening of this candle, right? You go off the opening of the candle, but you also have, you're gonna increase your risk, right? So this trade becomes like a 53 pip stop, or you go 50% of this, which is what I would usually opt for, right? For a smaller stop, right? Which brings us more to like a 38%, sorry, 38 pip stop, right? So, but again, you take the risk of missing the trade. Happens sometimes. Now, if that happens to you, right, where you miss the trade, then you just waiting though for like a second to the party type of entry, which then looks like what we just went through, right? Whereas price is creating higher lows, higher highs, all right? And you wait for price to break it, right? So price comes down, and when you get that break like this, bam, right? Which is literally, I think this is literally what Shaki called out today, right, on the live call. All right, so definitely a great sell. All right, you're literally waiting for price, it breaks. No, you got that confirmation, right? So now you can now look at price like through the lens of this, all right, where price comes down, breaks the area, pulls right back up. Okay, what you're looking for is, all right, you're looking for areas of imbalance. You're looking for order blocks, right? You're looking for something that's clear. This here, yeah, it's not. This one is not as clear. Let me say, right? So you don't have the imbalance, right? You have your order block, right? You have your order block, but you don't have the imbalance, right? So you're not gonna get like each and every time is like, oh my goodness, like yes, everything aligns, but it is relative. All right. Price broke below, so you got a break of structure. We know that we're going with the trend as well. All right. So the likelihood of price continuing down, it is definitely there. Okay. So then you get the pullback, boom, into the order block, and then guess what? The market sank. Yeah. You got the pullback into the order block and then price sign. So even if you might miss, like those first to the party type of entries, okay, well, when price gives you that breaker structure, then you could take it. Yeah. When price gives you the breaker structure, then you can take it. Okay. So I hope that this made sense for you guys today. I'll give you one more example. All right, let me give you one more example. So this was pretty good as well. Sheep. All right. So scenario here, once again, you have, for example, price is in an uptrend, right? We started to create an uptrend. We started to create higher highs, higher lows, etc. here, right? On the 4 hour, see how price, started to, right? Price took previous highs. Okay, price took out previous highs and then traded back down into this order block right here. Okay, so on a 4 hour time frame, looks like a pretty big area here. Yeah, that's a pretty big area here. So what do I want to do at that point? I want to uh go to a smaller time frame, right? I want to drop down my chart. Yeah. So I come down onto a 1 hour time frame perspective. What am I looking for? I'm looking for areas of imbalance. I'm looking for my order block. So here, for example, we can see that imbalance. Fine. Okay. So you see how like this particular trade, right? So now we get more specific, right? We can see our area of imbalance and we got our order block, right? Now this particular trade, we see how price did not reach the order block. Price literally just traded into the imbalance. 50% of the actual here, right? 50% of the actual imbalance, sorry, right? And then started to move off. Yeah. So, like I said, it happens, it's good though to identify, like how a particular pair moves. Because in the past, if you've seen that over and over and over and over again, okay, well, let me go with the actual imbalance rather than going with the actual order block, right? So then you end up with something looking like this, right? With like a 45 pip stop, and you could target the highs, right? So, you see how pair moves, you go over, test it, test it, test it, test it, test it, or do entries, see how you would actually enter the market and go from there, right? Sometimes, like I mentioned, sometimes you may just get the order where price hits the imbalance, right? 50% of the imbalance. Sometimes you might reach an order block. Sometimes you may just reach the opening of an order block, right? So like here as well, where you got order block, price pushed up, pull back, close of this candle, and then it went. All right. Like it didn't actually trade back in, 50%. Okay. So it's just to know what it is that you are trading. Okay. And if you miss it like this, like if you were looking for price to come down into this area and you miss, then you go with this. All right. You go with the next area, got the engulfing candle, price pushed up, it pulled back right here into the order block and buying, you gone. All right. You got the next entry. Okay. So, guys, my encouragement to you is to go practice, practice, practice. Use this replay tool. Pay the $15 to trade in view, all right, or how much ever it is to practice. Okay. Like get better at the chart, get better at what you're looking at. Like then you start to see not necessarily particular peers as, like you don't have favorite peers, you have favorite um um how to say it's not a favorite peer, but you just have a favorite way that the market moves. All right. And that's it. It's like, gold meets my criteria. All right. I've been trading, some other peers, sometimes, that meets my criteria, right? It's like, bro, it's like if it's too easy, it's too easy. All right. And that's where you start to view the market then through that lens because you come to a chart not looking at it through the lens of okay, well, this is USD JPY, or this is GBP, CHF, or whatever. I'm looking at it through the lens of okay, this is a perfect setup, right? This is what I want to see, right? As I go through and I back test and so forth, I can tell, okay, well, this particular pair, it don't really move, the way that I'd be looking for, right? Or that particular pair, don't give me the type of setups or entries, etc., that I want, So that's how you go about the market. Okay, it's not certain pair that you like, but it's rather just, this is the perfect type of setups that I like. Okay. So guys, I hope this helped. I hope this session was of value to you. I hope you can really go ahead, and apply some stuff. I want to encourage you guys, like I mentioned, practice, practice, practice. Go over the information. Um, just apply, just apply. So once it helped A lot. So I thought I was a bit. That was a lot. So let me know, guys, was this of any value to you? Did you guys learn something today? Yeah. Yeah. Awesome. Perfect. 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 That's thanks of great value. Perfect. Good stuff. All right. Nice. All right. So next session. So Shaki on Thursday, my guy, if you are available, you can let me know. We'll have a conversation. All right, we'll have a conversation. All right. But guys, looking forward to seeing you on the call tomorrow morning, live session. All right, 9 a.m. For those of you that can make it. All right. The session's being lit, man. All right, the session's being lit. And if you haven't got the app as yet, go get it. All right, go get it, go get it, go get it, go get it. All right. So with that being said, guys, have a good one.